Good afternoon, everybody. How are you? We'll get started here as people continue to join us at the webinar. I want to thank you for attending. If you would be so kind, please let me know if you can see my screen, TachEon Warp, and hear my beautiful golden dulcet toned voice. Screen is okay. Woo! How about today? How about today? That was kind of bananas. Bananas and fun and exciting and terrifying, all of those things at the same time. A customer of ours was telling us about a customer he has who lost over $150,000 not too recently playing in the markets. And unfortunately, that's a fairly common story lately. And I want to show you a few things today to help, hopefully, some of you that don't know what we do or how we do it, do a little better than you've been doing. Give you an edge that's relevant. Earlier in the week, I sent an article out to some of my customers, and I thought it bore out examining a little closer here today. It'll sort of frame up what we believe. BlackRock, the world's largest asset manager, says central banks are deliberately causing recessions, warns of a downturn unlike any other. That's interesting. That's very interesting. The world's largest asset manager says the institutional traders, the investment bankers, are deliberately causing recessions. Now, it's not the only article that seems to point towards that. There are other companies like JP Morgan Chase on justice.gov. Under the terms of the deal, JP Morgan, the world's largest investment bank, trading bank, will pay over $920 million in a criminal monetary penalty, criminal disgorgement, and victim compensation, with the criminal monetary penalty credited against payments made to the CTFC. It's $1 billion. So it seems like BlackRock has a pretty good bead on what we've been saying for over a decade. That is, the market you trade is not random. And so we've spent the last 13 years, over 3,000 customers, building a tool that hacks its way into the good old boy network, that looks for the times that companies, institutions like JP Morgan are most likely to push the markets you trade higher and lower in the future. In fact, we're the only company I'm aware of that, in order to build credibility with you, to show that we are in fact transparent and trustworthy, give you the times and directions for the most popularly traded markets in advance of our demonstration webinar. We give you a simple trading system to follow along with when the times arrive in advance. And then 2 days later, we get together and give it a corporate thumbs up or thumbs down. You see, because most vendors lie. Most trading companies and education companies and tool suppliers are just well-oiled, finely honed marketing machines. And there are many nights where I go downstairs to my wife and family and I say, you know, I wish I'd taken more marketing classes in college. All I took were engineering classes. And my wife will always remind me that we've helped a lot of people doing what we do because of our engineering backgrounds. And it's probably better that I don't have a marketing talent. I don't know the first thing about Google ads or Facebook marketing or Instagram influencing. I just know how to build things that work. And so we're going to see today if the experiment worked again. After 600 webinars, were we able to predict when these markets would go up or down? And it's all based on a theory, a thesis, that when most people look at the markets, they just see random noise. They see news reports, they see talking heads on television and on their live streams, and they're staring right at the answer to their problem, except they don't recognize the patterns in the chaos. See, there's no such thing as chaos in this world. There are powerful and powerless people, and the powerful have their means and ways of talking to each other. It's in the data. You have to look where they operate. And we'll show you here today how that happens. And much like a QR code that is now commonplace on all of our products, if you don't have the information sorted with the right tool, you'll miss it. You won't understand what the data is trying to tell you because it's buried in the noise. It's buried in the noise. And so we're going to get started here, and I just wanted to preface that with all sorts of shenanigans having gone on here in the last week. One of the articles I found talked about the release right before the CPI report this week. People were trying to understand, where did this rally come from 1 minute before the inflation report came around? Where did it come from? And no one knows. Significant trading activity ahead of market-changing news is suspicious and typically worthy of regulatory agencies making appropriate inquiries. I want to repeat that one more time as we get started here today, because I think it frames everything I've been teaching for the last decade, right? Significant trading activity ahead of market-changing news is suspicious and typically worthy of regulatory agencies making appropriate inquiries. This is this week. This week, where did the spike come from? And then it dropped all the way back down. Dropped all the way back down. Last week in our webinar, I warned everyone about the impending drop in the E-mini S&P. How many of you have been following along in the webinars each week, and you were here last week? You were, that's right, you were. And last week when we reviewed the daily time cycles, I warned everyone here about Tuesday, December 13th. I've posted about it frequently on popular Facebook forums for the E-mini S&P. And lo and behold, when we arrived there, can everyone see what happened? Tim, Randall, Nick, can you see what happened when we arrived on the 13th, the date of that mysterious, suspicious trading activity? Again, I'm going to frame this for you. It's important. Please stop what you're doing, invite a friend in here, and listen. In 60 seconds, before the inflation report hit, heavy trading drove mystery rally that fell right back down. Last week, before we left, you knew about this day, the 13th. Luke, it was predicted to be the reversal day for the market. Good news came out. Inflation was less than expected. We've got this figured out. Prices are falling. Woohoo! And look what they did. Ready? Here it is. This is what we've been preaching about for over a decade. What did they do, Tim? What did they do right here on good news? They lured the traders into a stop run. They got all the cows marching in the right direction. And here's the wick. It came all the way up, broke through the stops, and then did what? Came all the way back down and fell and fell. And our customers knew about it. We told everyone, watch for it. Here it is. And they've dropped now from this high, from nearly 4,200 down to 4,000, 200-point drop, 2,000 points in the Dow. No end in sight. So let me just reframe this. 18,000 people knew about this day. On the day of the event, in a mysterious rally that has caught the attention of regulators, push prices past the high just before the report and then collapsed. A date that we knew about in the future. When I go on Facebook, I always say the same thing when I make my posts. The market you trade is not random. I've been saying it over and over and over and over again. Now, how do we prove it? Well, on a large time scale, we've been able to prove it. We've been doing things like using moon cycles to prove it, to show how predictable markets are. In fact, I went on the E-mini S&P Facebook page, over 7,000 group members, I believe, 6.8 thousand members. And last week I made a post and people are saying, what direction will it go? And I said, hey, this is an even simpler method of predicting market movements. Everything on here is a full moon and a new moon. People go, that can't possibly work. And I said, I went back and I looked how far every full moon pushed up from the low of the signal to the high of the move before the next new moon. And I drew all these triangles. Can everybody see? There's 1,000 ways to show how predictable the markets are. And I went back and I showed people, look how high it went from the low to the sell signal, from the low to the sell signal, from the low to the sell signal. And I did it for the last 1, 2, 3, 4, 5, 6 full moons. And then I showed people, if you overlay all the triangles on top of each other, Tim Murphy, can you see what the analysis revealed? These were all the highs from the last 6 moves. And can everybody see how high the market went on that spike? We knew, and I told them, it's not going any higher. We've already hit the maximum move that banks commit to. It's only down from here. I used the size of the moon in the sky to show how predictable markets were in a public forum with 7,000 viewers. But that's not enough because we still aren't believed by people. About 5 to 7% of people who take our trials and come through the training and go through the webinar actually believe this is true. So we have to go further and further and further into proving that what we do is working. So let me just pull this down over here. And what's that time? 15:39. All right, perfect. So somebody asked me today earlier about the E-mini S&P. We send out these forecasts on this page. I'm going to paste a link to it in your chat box. You can get these if you're not a customer yet by taking our live video demo at backtothefuturetrading.com. And if you're watching from home, the link is backtothefuturetrading.com/warp-webinar-forecasts/. And so every week on Tuesday night before our webinar, I send out the times and directions for the most popularly traded markets: S&P, E-mini, oil futures, gold, the DAX, euro currency, the YM, the NASDAQ, the euro dollar, pound dollar, Ethereum, to show people that, hey, we can analyze these markets and tell you when these moves are likely to occur. So earlier today on the E-mini S&P forum, I posted these times. And I said, hey, watch what happens throughout the day. Watch what happens throughout the day. Now, what is this chart trying to tell us? Well, the software goes back into the historical data, and it looks for the times where the cheaters like JP Morgan, the cheaters like Goldman Sachs, are cheating. Imagine for an instance that the price of oil goes up every day from 10 o'clock to 11:30 on the button. 10 o'clock, up it goes until it gets to 10:30. Womp, 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 and then it stops. Can you imagine after a week or two, Richard Randall, what would happen? Everybody in the world would buy at 10 o'clock on the button, 9:59.59, order filled. Or can you imagine if the price of gold dropped every day at 9 o'clock Eastern for 15 minutes until 9:15? Everyone would short, everyone would sell. But it's not that simple. Like all things in life, you have to work a little to get to the truth. And so 12,000 lines of code dug into the historical data, did a statistical analysis, and came back and said, hey, these are the times on Thursday where we're expecting shenanigans to occur. Such a great word. And so 527, 612, 657, 836, all these times on the top of the chart were expected to be selling pressure times. Selling pressure, times historically where someone has put their fingers on the scale and pushed down. All of the times on the bottom of the chart, consequently, were expected buying pressure times. Times where banks were expected to push prices higher. Not because of some black box algorithm, not because of my divine guru-like abilities, but because lately that's when they've been doing it. A lot. Not every day, but enough days to cause a red flag. The software sees that time and goes, be prepared when that time comes around, because they might do it again. Is everyone following? Say okay to yourself if you are following. Okay. Okay. Now, here's the cool thing. People have had this since Tuesday. And now it's Thursday. What happened? Well, while you were waiting to come in the webinar, for one thing, I want you to see that I took a position. I'm going to come in here And I just want you to see what happened while we were waiting. The forecast warned us about a move right here at 3:39, just before the webinar. And I said, you know what I'm going to do? I'm going to place a trade right before they come in and leave it running live. If you got here early today, you saw it. At 3:39, what was expected to happen? Market was expected to experience selling pressure. And so I entered 39.01. And then I got out right here at 3:57. The software had warned me. Goldman Sachs and JP Morgan are going to do it again, maybe, at 3:39. And you have a window until 3:57. The window of time is on my chart. And NinjaTrader is the only platform that lets us do this. It's an awesome trading platform because they let us plot signals to the right of the price bar. And so I went short and I got in. It went up almost $10. And when I finished, I gave up about a third of the gains because my window was closed. And then can everyone see what happened here? What was expected? It was expected to go up again. Buying pressure was expected at 3:57. And look, 1 bull bar, 2 bull bars, 3 bull bars, 4 bull bars, 5 bull bars. At the time, that was expected, that people had over 18,000 prospects. People who don't own the software had this email in their inbox. Well, let's look at what happened for the entire day. The day with no bottom. Shall we? This is the entire pre-market and US market today. And in my Facebook page for the company, I posted these little notes. Sell here, sell here, sell here, sell here. We could have extended them for here and here and here and here and here. These were all the opportunities that we had today on the E-mini S&P using a simple system that I teach every week with total transparency. What is that system? Well, first we have to understand the difference between a signal and a setup. The signal is the time and the direction that we're waiting for something to happen. The setup specifies the rules and conditions necessary to place a trade and then defines the risk and reward of the trade. So a signal is a loosey-goosey little time in the future. 11:58, sell. 3:36, buy. Well, that's great. What do we do with it? The setup tells us what to do. And so I just want to specify, before we go any further, that the rules that I'm showing you, that I'm teaching you here today, were already outlined before the webinar. Correct, Doug? And so on this page, the rules of the setup that I'm about to show you were already defined. I'm not making anything up after the fact. We'll also be showing you how the signals can be traded by using one of two simple entry rules called signal with trend or the puncture trade. This video provides an overview explanation for these. A max 1.5 volatility stop will be used in the setup for Thursday's demonstration. So, Tom, not only did I give everyone the times and directions in advance, I also gave them the signal parameters, rather the setup parameters for the entries and the exits. So I get about 9,000 emails a day saying, why don't you have a free trial? I give free trials out every week. I give 40% of the signals out for all these markets for free every week. One customer came for 2 years before he bought, a guy named Lars. And he said, hey, I've been coming for 2 years. I've been trying to figure out how you're fixing this. I've determined you're not, and you've been honest. It took him 2 years to get over all his anxiety. So what does the system involve for our setup? Well, the first signal is called a signal with trend. When the signal comes and the trend is up, here's what we do. Number one, we enter at the close of the candle, big E right here. Our stop is 1.5 average true range values below the candle. That's our stop, S. Our exit is the next time. We exit on the close of the candle of the opposite time. So if we're buying, let's hold on till the selling usually occurs. Sort of like putting a piece of toast in a toaster. The toast comes out when the timer is finished. Tick, 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 ding. When the next signal comes, the 120 period moving average is going up. We enter at the close of the candle. Our stop is 1.5 ATR values below the candle. We exit at the close of the next signal. Ding. When 712 comes, buying signal in the direction of an uptrend. Enter at the close of the candle. Stop is 1.5 ATR values below the candle. We exit by the next selling pressure signal. Exit. Ding. This is called a signal with trend. I will write SWT a lot of times on top of those signals. Signals with trend. And the premise of this setup is simple. When we get in to a window of time where the cheaters usually cheat, we're in the flow being pushed by their orders. And so over the years, when we study this type of a setup, we see that the signals have a positive expectancy, right? So here, 24/7 Globex over 900 entries with trend. You can see that the model has a positive expectancy. When we follow that type of process, just getting in and getting out in these windows, the chart tends to go up and to the right over time. If you trade a very basic trend entry system, your expectancy is generally considered to be approximately 55% with a profit factor between 1.5 and 2.0. The model has a positive expectancy. Very, very, very basic entry exit rules. Now, if the candle starts out below the moving average, it's a buy signal below the moving average. And then it eventually pop closes above the moving average. We enter at the close of the crossover candle, the candle that crossed over and closed above the moving average. Think of it like a submarine, and there's a layer of ice, and the submarine periscope breaks through the ice. This breaks through the moving average and closes above it. Our stop goes one tick under the close, under the low of the crossover candle. And now we exit by the opposite signal. We get inside of that window. This is called a crossover signal, variant of the signal with trend. If it eventually crosses over the moving average, we trade in the direction of the trend at the close of that candle, until the opposite signal, when that selling window is likely to start. Doug, I do too, or Don, rather, I do too. What you just said, I agree. Now, the next signal is called a puncture with trend. Think of it like a failure with trend or a breakout. It's a little more cerebral, but I think you can take it. I think you can hang in there. Here's what a puncture signal does. In this example, 9:30 was historically a selling time, meaning in the past at 9:30, the software detected most of the time that Ron, it would do this. It would go down. So Randall, at 9:30, the program is telling us over and over and over and over and over again, cheaters push the S&P E-minis down. Well, in this example, the trend is up. So what don't I want in my way if I'm trying to get in the trend? I don't want sellers. I don't want this. So the puncture trade operates like this. My stop is again 1.5 ATR values away from the high of this candle. If it keeps going up and up and up, the sellers that are historically present are missing. The sellers that are usually here, the guys over at JPM that usually push the button and throw 1,000 short contracts out there, they're not here. It's like an old Western with tumbleweeds rolling by. No sellers. And it keeps going up and going up. So I take a chance, Raja. And I say, hey, I'm going to buy when it punctures the blue line stop. I'm going to put my stop now one tick below the puncture candle. Stop, entry. I'm going to exit at the close of that signal. So my window of time is still from 9:30 to 9:48. But this is a failure with trend. The buyers are overwhelming the sellers. No one is defending this position. Historically, it's not obeying what it usually does. And all the people guarding the bank are on a break in the bathroom at lunch. Let's try a long and see if they stay away for that window of time. That's a puncture trade. That's a puncture trade. And I've taught that now for years and years and years and years. And our hope is that it still defines a statistically relevant edge. This is not a holy grail. I am not your guru. I did, however, discover a time-based edge. When you use time, some things start to happen. Number one, you don't overtrade because you know what times to make your stand in advance. I know what time I wake up. I know what time I eat lunch. I know what time Desperate Housewives was on. I know what time to go to bed. I have a schedule in my life. You can have a schedule in your trading. Number two, your stops are smaller because if the trade doesn't work, it was supposed to work now. Smaller stops. I'm not going to give it room to breathe. The move either starts now or it doesn't, like a rocket launch. And then third, you'll see here, I know how long to let my profits run. I have a reason to stay in the trade beside the voices in my head, which are crazy, right? So we want to see if this defines an edge that gives us something to follow in the market. So let's get rid of this chicken scratch, and I'll show you today one example in the ES what happened, right? So let's start with the pre-market. 657 vertical line. I'll put the line here to show us each setup as we go through it. And if you're a customer, pay close attention because this is a really simple system to follow. At 657, there's my entry at the close of the candle. There's my stop right above that blue line. Enter at the close, exit at the close of this candle. I lose 3 ticks. It went in my favor. There's no trail stops here. We're just going all in and all out. Okay, then it punctures through the white line. It comes back and hits the stop of the puncture candle. I lose $2. Candle closes here. It punctures the blue line, the white line again. I enter at the puncture again, and I exit by 8:36. So there were 2 puncture attempts, one here and one here. The stop for the first candle, it violates that stop. It comes up, punctures it back down. There's my stop for that trade, and I'm in until the close of that window. Puncture trade. 8:36 comes. That's a signal with trend. What are the rules for that? Well, I enter at the close of the candle. My stop is 1.5 ATR values away. I hold the trade until the close of the next buying signal for $16. We get to 9:48. It's a white signal in a blue downtrend. We're waiting to see if the banks will defend that position. We want to see if the buyers are going to come in and push prices higher, if profit taking is going to occur. And they don't. It drops and it drops and it drops, and there's no one guarding the bank. And so we place our sell order right here at 39.20 quarter. Our stop goes just above the puncture candle, and we hold it until the next selling pressure signal, which closes at 10:03. Boom. We make $13. Everybody following? Now, we get in at 10:03 and we hold it. Look, it goes against us. And then it finishes $2 in our favor. The window of time worked. Now we're watching that 10:33 signal. You guys gonna buy right here? And they did. They bought at 10:33, and it goes up, 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 up. They never break our white line down here. Never happens. No puncture trade. So let's stay with our signals here. Sell signal, sell signal. 10:48. 10:48. Raja, I'm not paying attention to any of that right now. The candle closes, that's where it is. I don't care what color it is. There's no rule for that. 10:48. Close of the candle. Stop is where? Above the blue line above me. I'm going to hold it until when? The next signal time. 11:18. Ding! Nearly $19. We get to 11:48. We finish a little higher than we started. We lost $1. At 12:12, what are we waiting for? We're waiting for it to go up, or we're waiting for it to fail and break through this white line. What did it do? Well, it went up. Look, all the way up to here. 1233, opportunity for a signal with trend. We enter at the close of the candle. Very good risk opportunity. And we exit at 1248. No stress. Now I'm waiting for, here's a tricky one, right? I'm waiting for a puncture of this white line. And it happens on the candle. The candle opens at 109 and it's coming down. My stop is right above that candle. I enter at the puncture with a sell stop and I get out at the close of that signal, 275. This is both a signal with trend candle and a puncture candle. 109 comes and the trend runs out of steam. I lose a lot of money. How much? Woo! Almost $3. I get in again at 145. I get out at 206. I lose a $0.25, quarter point. What was expected to happen at 206, everybody? That's right. We're expecting buying pressure. Well, how long have we known about that signal? Since Tuesday. Since Tuesday. When we get to that signal, what did it do? Went up. $303, we're just below the moving average. It closes there. We get out by 345. 315 rather. We're below the moving average, below the moving average. It closes above the moving average. We enter. It goes up a little bit and then it drops and hits the stop. We lose $7.50. So this was a buy. We'll change the color. The only buy of the day was a loss. The next signal is at 339. That's the one I showed you the entry for. 339, we enter at the close of the candle. We exit by the white dot. The last trade of the day before the close. How did we do? How did we do? Let's add it up. Remember, 95% of people who see this webinar never believe what I'm telling them. 10. Oh, I got to move this over so I can see the signals better. 10 plus 16 plus 13 plus 2 plus, what is that? 18 plus 9 plus 3 minus a quarter minus 3 minus 1 minus 2 minus 1. The net total on the day is $63 times $50 per contract is a $3,187 day. Let's take 90% of that for slippage and commissions. What did we say? 3,100 times, let's do 85%. That's a $2,600 day in one day. If you're trading micros, it's a $263 day. But the same thing that we measured in our sampling is playing out here. We're winning and losing. We're winning more than half the time. We're losing $1 and making $1.50 to $2. Just following the signals in the direction of the trend. Yusuf, that's a good question for Rachel. She prepares the signals for me every week. One thing you can do is you can crunch your chart up like this. And I now have the signals for Friday and Monday right here. See, that's the thing about the software. We're the only company that's giving you the times in advance. These times on the right-hand side of the chart are always here. They never repaint. They never disappear and reappear. They never recalculate. Once the number is on the screen, it is the number forever. Forever. Now, it doesn't just happen on futures markets. You see what happened on the oil market today? What generally happens when we arrive at a time we've been expecting for 2 days to be a selling signal? What generally happens when we arrive at selling times in oil? And what generally happens when we arrive at buying times in oil? What happens if you enter in the direction of the trend and you hold it until the exit? It's $1,000 signal. Wouldn't it be nice to get in a trade and it moves in your direction, $920 right away? So Dave says, how do you set your stop? In the indicator, Dave, there's a parameter right here. I'll blow it up so you can see it. And we'll double the value. You see, Dave, right here what it says? Use volatility offset is checked. And then the period of the ATR is 7. And this number is you can edit this number. So I have it set default when the software arrives on your computer to 1.5. Generally speaking, if the market moves 3 ATRs against your position, the trend has changed, right? If the market moves 3 ATRs away from its current position, it's a trend reversal. 1 ATR value is generally known to be market noise. It's basically saying, hey, every 5-minute bar right now is 14 ticks on average. If your stop is 14 ticks away, you're just inside of the market vibrating and being the market. It's just sort of moving back and forth. 1.5 is just outside of that volatility range of noise, David. But for some markets like the NASDAQ E-mini, for example, you probably want to tighten up your risk because the volatility can get pretty high. So the lowest I'd put it is 1. The most I've ever put it is 1.5. David, did that make sense? That's where it's plotted. If you want to use a fixed stop, you can also deactivate that and use a fixed stop and target as well. So this is what happened in oil today. Let's take a look real quick. And I want to show you some other cool stuff while we're here. Yeah, David, just reach out to Ron or Rachel. Also on the website in the customer login area is the most recent download for the version of Warp. So there'll be a download for that version. No, thank you. I appreciate you. Thanks for supporting us. So this is the E-mini NASDAQ on a 1-minute chart. And I want to explain to you why it's so cool, because this is really awesome. Remember, on our calendar for the week, we have Sunday night, Monday, Tuesday, Wednesday, Thursday, and Friday. So we'll put a little thing right here. Monday, Tuesday, Wednesday, Thursday, and Friday. So I usually try to send the email out right before I go to bed on Thursday. Rachel publishes the times on Monday. So these times have been in the public domain since Monday. I send them out via email on Tuesday. And those signals cover all of Wednesday and all of Thursday until the close. So I want you to think about this next NQ chart. The NQ 1 minute chart times have been available to us since Monday. We'll go ahead and make it blue. And so, Dave, check this out. The farther we get from that email, from that posting on the web page, the harder it should be for this to work. Would you guys agree with that? The farther away we get from the original posting, the less and less likely the times and directions should work. Now, if you've been studying predictive things in the past, one of the things that I get a lot are Hurst cycles and Fourier transforms. The weird part about those is they have to recalculate, because the farther you get from the original predictions, the worse it usually gets. And so you'll see a chart and they'll say, hey, this is what we predicted happened, and it happened. And if you go back and look at the original prediction, it goes down. And they don't tell you that this entire line recalculated to this. And so the farther away you get from their predictions, the worse they become. Well, here, we're as far away on Thursday afternoon from the original prediction as we can get. And again, we have them to reference. We can come back and say what was expected on Thursday in the NASDAQ. There it is. Ding! We could load it right up. So we pull this over. And I just want to point out a couple things. We slide this just so you see 254 right here, 309. These have been known about, 254, 309. There's 309 right here. Here's 254 right here. Here's 227 Eastern over here. Would everyone agree? Would everyone agree that the times that have been published since Monday are the times that are on my actual chart today, Thursday? Would anyone disagree? Do you see any times there that don't match? Okay, cool. We're cooking with gas now here. In your GoToWebinar chat box or in your GoToWebinar control center is a handout. There's a handout in your GoToWebinar control center. So there should be a gray box that says handouts. If you look on your side, I'm not sure how it looks for you guys. For me, it looks like this. And there's a box that says handouts. Okay? So I want you to click on that handout, because about 7 years into our journey, we discovered that timing signals have a code. There are definitions of things. And some of the signals that we've been watching for years, when we arrived at those signals, they go in the exact opposite directions. So I want you to, Luke, you especially, scroll down with me until pattern 5 appears, which is right here on page 27. So on page 27, this is one of the patterns we began to learn. There's a total of 8 of them so far that we've discovered in 13 years that work very consistently. And one of the things we discovered was this. When we arrive at a selling pressure, at a buying pressure signal, forgive me, when we arrive at a white dot time, and either the signal itself or the candle to the left or the right, any one of these 3 candles, if they have broken through and are higher than the prior swing high, Luke, we're going to give them an opposite color arrow. Let me say that again. If we arrive at a buying pressure signal, and either the candle to the left or the right, or the signal candle itself is higher than the previous high, it inherits a pattern 5. And then what historically happens at these patterns is they tend to go down. Pattern 5s tend to mark the high of an area. Pattern 5s tend to mark the high of an area. Think of it as an overbought buying signal. A pattern 5 is a saturated buying signal. It is a buying sponge that is filled to the outer corpuscles with buyers. It can't fit one more, and it pops. And so there are 2 examples of pattern 5s on our chart right here. At 243, look, 243, it's a buying pressure time. There's the prior swing, and this first candle isn't higher, the second candle isn't higher, but looky, the third candle is higher than the prior swing, and it inherits the opposite color arrow. And Luke, did it do what a 6-year-old book going on 7 years predicted would happen? Yeah. It was saturated. So if you had this pattern 5 signal and it closes, Luke, below the moving average, it's a crossover trade. It's a signal with trend. If a pattern 5 happens under the moving average, it's a signal with trend because it's a selling signal. But the software, when we activate one box in the indicator, will automatically plot these. And for years, we had customers who would email us and say, hey, I followed your times, but like 25% of them went in the opposite direction. Yeah, I know. Here's why. And then we built that into the indicator. Now, check it out. Luke, before we go any further, there are times when the opposite occurs. If we arrive at a selling pressure signal, and either the signal candle, the candle to the left or the right, are brand new lows, they will inherit the opposite color arrow. So look what happens. There's our prior swing. And then Luke, right here, that candle drops below. Right here at 230. And what does it do? what pattern fours usually do. It goes up. So when it crosses above the moving average here, we go long. So the handout, I leave it in the webinars every week so that when we come back and look at the times, you know I'm not trying to pull something funny on you. I'm not trying to do what other vendors do, right? Which is manipulate markets to make them look like they did something I didn't say they would do, or do something after the fact. So now when we come back and look, what were we expecting? A regular buying signal at 123. That's what was expected. We were expecting a selling signal at 144. We were expecting buying from 208 until 227. 227, we're expecting selling. We have one bar before it changes color. And pattern 4 plots on the screen. We can enter long at 243 for one bar and have to exit because we get a blue arrow and it goes down. And then at 254, it's a failed signal. It just goes up and up. We get punctured and we're long until the next signal. The next signal changes to a pattern 5. And then the signal after that, 309, is the high. It goes down until the signal time at 320. We're getting farther and farther and farther from the forecasts. What was expected? It's a plain Jane vanilla buy time, no patterns, up until 338. At 338, we re-challenge the high. It fails. If you're watching this and you have the software, you know, hey, my risk on this trade is now just above the high if you want to go counter trend, but I'm more interested in what did it do at the time we were expecting since Monday. It went down. Until when? We were expecting it to reverse at 351. We're expecting it to go up until 403, up at 408, which it doesn't, womp womp, and then down just before the close at 413. Now I want to ask you a question. If you're watching this video later in the day, at what point could I have manipulated any of this to make it work better than it did? Where could I have cheated to be a fraud if this was the process? We can go into the weblog and I can show you when those screenshots were uploaded. I can prove that they were uploaded before I sent the email out on Tuesday. All of Tuesday passes 24 hours. All of Wednesday passes 24 hours. Add another 12 on there. 48 plus 12 is 60 hours later. We arrive at this point in the most volatile, unpredictable market that eats everyone's lunches. And out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 signals, 2 of them didn't do what was expected at those times. If you want to be really stringent, we can say this one started here and ends lower. Let's cancel that one out too. 3 out of 13 didn't work. I'll give you that one too. And as we go back in time, guess what? It's not the only signal. There were more of them. How much money could you have made today if you knew the times in advance? And if you're a big time frame trader, I've been telling people now to watch for the sell signal in Apple for months. I've been telling all of you, this is the next date. It's been on my charts, in my webinars. Go back and look at last week's forecast. December 13th. Look for some puts on Apple. Whee! Guess what? Brand new low. When does this end? January 2nd. I told you about this signal on October 3rd. I warned you about October 13th. I warned you about October 26th, the up move at November 7th, the down move at November 18th, and then looking for buying pressure from November 28th until December 13th. I warned all of you, and no one ever listens. No one ever listens. They like being surprised. They like their crazy ass indicators and their guru with the British accent or the Russian guy that they follow. And I don't care if you trade forex or crypto or whatever you're doing. SBF should have used my software. Sigmund Freud, whatever the hell his name is, down in the Bahamas. You can put this on crypto. You can put this on wheat. You can put it on soybeans or corn. You can put it on Tesla. You want to know when to sell Ethereum and short it? You want to know when to sell Bitcoin futures and short it? Guess what? I'm the only guy who knows. That's not true. Our customers know too. See, now I'm starting to sound like an idiot. It works on futures. It works on forex. It works on equities. It works on stocks and options and crypto. You can use this tool on everything. And so ultimately, you know, we sort of come to this question. What is trading? Trading is not making a decision based on what just happened. Trading is not betting your money on what your indicator said happened 5 bars ago on average. Trading is about an estimation based on a statistically relevant edge of a future event. Will prices be higher or lower in the future time? Time. Trading is about time in the future. Where will price likely be? Many of you were stuck looking at the past and the present. Oh, wow, I had 14,000 shares in my volume bar. That's great. What about the future? Yeah, I don't have anything for that. This works on NinjaTrader. I don't say that apologetically. NinjaTrader is one of, if not the most powerful trading platform that exists. I don't want to hear, well, I heard it had crashes back in 1938. They are the only platform that allows us to plot signals in the future. The platforms themselves don't want you looking at future signals. Their code won't support it. Ninja does because they're awesome. Well, I use TradingView. I don't care. It's like driving a car with no airbags. Well, I drive Pontiac Fiero. Hey, don't those catch on fire? You can change cars. You can drive 2 cars. You can use 2 platforms. Trading is the only business in the world that you can operate from your bedroom in your pajamas for less than $5,000. It's incredible. Invest in your tools and in yourself. Saying you don't want to change platforms or use another platform is like, hey, I only like doing push-ups. I don't want to do sit-ups. Well, you're never going to compete in the Mr. Olympia contest. you'll be push-up guy. Trading is based on what will happen in the future. And when you see these types of results and you go back and you say, how did he do that? I would like to know these times. It's possible. It's possible. Now, my favorite part of the webinar. Look at that. I'm right on time, Dave. I am right on time. This is our website. This guy's sitting here pensively staring at his professional trading software. Is on our webpage, and the product store will take you to the program that I've been talking about. And I'm going to put a link in the description to that. By the way, we have a 4.9 out of 5 rating with actual customers based on 83 reviews. You can talk to all these people. They actually have receipts. They don't work for us. They're people who bought what I'm about to show you right now. And the program I've been demonstrating for you is our flagship product. Here, I'll draw a little flag. TachEon Warp. So I'm going to click on this link, and I'm going to give you guys a link to the page. And here's the good news. There's a big fat promo code today because it's the end of the year and we're supposed to sell it less expensively because Black Friday, Purple Tuesday, Cyber Saturday, whatever. At the bottom of the page, you will see a buy now link. The software normally retails for $24.95 on the website. If you click on the buy now link, you'll see an option that pops up. We have a live trading room that meets Tuesday, Wednesday, Thursday, 8 to 12 Eastern time, covers the morning US session 3 days a week, 12 days a month. That room, if you want to participate, costs $150 a month or 3 ES dollars over 12 days of trading. I showed you in the ES today over 3,000 potential dollars in just one 8-hour example of signals. If you like that, if you need that, if you want to be in a room where someone who knows what they're doing is explaining the setups and showing the entries and exits, then you can get it for 25% off. It's normally $200 a month when you buy the software. If you don't want it, you don't need it, you like learning on your own, you got your own setup, your own rules, you just want to add this for confirmation, stop bothering me with your trading room, don't click on it. It's not a problem. If you go that route, you'll see that it takes you to a purchase agreement. This is very important. When you buy the software, please don't think you're going to try it for a week and submit a chargeback to Visa and say, hey, I didn't even get it. I never installed it. You're signing a purchase agreement when you purchase this with us. We put massive amounts of resource into our relationship with you. We hire people to train you. We hire people for installation. We put videos and training materials immediately in your hand. Okay. We promise to make sure the code works. There are no bugs. There are no open issues. 3,000 plus people. That's our half of the deal. It's a lifetime license with free updates on this software. We continue to make it better and better and better, like adding those patterns I just showed you. If you intend to steal the software, reprogram, do stuff your own, we're going to turn your license off and you're going to hear from the offices of I sue you, you sue me. All these things are clearly outlined in the purchase agreement, which you must agree to when you go to purchase software. The promo code is WARP750. WARP750. I'm going to write it in big letters. WARP750. No spaces, no lowercase letters. That takes $750 off of the price. This is the time of year where anyone who's going to get on the train before we start, this is your stop. It will never be lower than this price. If you're waiting for a yellow Thursday sale for Arbor Day, tie a yellow ribbon around the old oak tree. It's not coming. This is the lowest price. I showed you over $3,000 of potential gains in one day. It's not expensive. It's too much money. Most of you have lost that amount of money in one day before you found us. Again, the one customer who lost $150,000. Holy cow. There's 100 times the cost of this. Lifetime license, free updates for life, 2 computer licenses, free white glove installation, video training archive, opportunities for personal mentoring and training with me, my partner and best friend and trainer, as well as now 3 customers who trade live with the software who can work with you and mentor you if you need additional assistance. 13 years, 4.9 out of 5 rating with actual customers, with actual receipts. The opportunity is yours. Any questions here before we wrap up this afternoon going into the holidays, the holy days? Nope. Okay. If you need me, here's a fun factoid. MICHAEL at backtothefuturetrading.com. My phone is 336-703-7667. My Skype address is Integra-Michael. I'm going to blow this up so you can see it even closer. You want to scribble that down. Just text me before you call. This is my mobile phone. Michael at backtothefuturetrading.com. I am the owner. I'm available until 11 p.m. Eastern and then up after 8 a.m. Eastern. So you got a 15-hour window if you need to reach me. I know some of you are overseas and we try to accommodate that. 336-703-7667. Mobile text first, please, if you're going to call, so I can let you know it's okay and I'm not watching the Hallmark Channel with my wife and kids. My Skype address, Integra-Michael. Bazinga. The market you trade is not random. It is, as my father used to say, as crooked as a dog's hind leg. If you want to be on the right side of the trades more often than not and make more money than you lose, I would love an opportunity to show you what we've been building for you for over 13 years across 500 customers with a 4.9 star rating. On behalf of everyone here at Back to the Future, may the sun shine on your face. May the wind blow at your back. May the valleys rise up to meet you and the mountains lay low before you. I wish you peace in the face of anxiety and uncertainty. I wish you prosperity in these uncertain, tumultuous times. I wish you attraction for all of the things that you desire for yourself. And I would love to be a part of your team, and I want you to be a part of our family. If that's the case today, please consider joining up with us. Those of you that have bought already, we love you. We appreciate you. Thank you so much. We never stop thinking of ways to make these things better and give you more and more powerful edges. Thank you for standing alongside of us from day one. And we appreciate you and have gratitude for you in our hearts as well. That's not just lip service. It's true. And those of you that know us know that. Thank you again. Give us a shout. If you get an email from a crazy guy named David, he does work with us. He's pretty awesome. And he's going to help you find ways to onboard and get on the right train with us. So if you get an email from him or a phone call, hear what he's got to say. He's really good at helping customers come online. And so we'd love for you to spend a few minutes with him on the horn if you get a chance. Have a great night, everybody. Watch for this video to be uploaded to our YouTube channel, YouTube at Back to the Future Trading, where we'll update and continue to post our videos. Also, look for us on Facebook, Back to the Future Trading, where we regularly post as well. Take care, guys. Be safe and be careful out there. The market you trade is not random. Good night.